Bitcoin is dropping to $20,000 if... Hey guys, what's going on? Jeb here, and in today's video, we're going to be talking about a drop that could be coming very soon on Bitcoin. After the SEC filed charges against Binance and Coinbase and put forward multiple 100-page long complaints against Changpeng Zhao, CEO and founder of Binance, against Binance and against Coinbase, a war has been declared on the Bitcoin and cryptocurrency market. And with an effective federal funds rate more than likely hike and a bearish CPI report coming out next week, there are dark clouds brewing over crypto right now. In this episode of Climate of Crypto, we're going to talk about why if Bitcoin breaks one critical level, a $5,000 drop could be right around the corner. So without much further ado, let's go ahead and dive right on into it. On Monday, June 5th, the Securities and Exchange Commission filed charges against Binance. And the very next day, on Tuesday, the SEC filed charges against Coinbase for very similar allegations. The allegations stand as follows. Number one, Binance and Coinbase allegedly are operating as unregistered brokers, dealers, clearinghouses, and exchanges of securities that have not been registered. In page 85 of the SEC's complaint, you can see Binance's Coin, BUSD, Solana, ADA, Matic, and more are listed as crypto asset securities. The SEC is alleging that Binance knowingly offered unregistered securities as outlined on that page. Further, on page 33 of the Coinbase complaint, the SEC adds Chiliz, Flow, ICP, Near, Verge, and Dash, and Nexo to other crypto asset securities classifications. The SEC has come down hard against Binance, Coinbase, Changpeng Zhao, three of the biggest names in cryptocurrency, two of those being the largest companies in crypto. That drop originally led Bitcoin through a major downturn, which was bullishly engulfed the very next day. Good job, Bitcoin bulls. However, the worst is not yet over, and I'll tell you exactly why. Looming ominously in the next several days is another effective federal funds rate decision. And while many are predicting now that that decision will bring with it a Fed rate pause, there is still a high likelihood that an increase could come. Especially considering that on June 13th, when CPI data drops, we're very likely not going to see a drop in inflation. We're probably going to see core inflation stay at 5.5%. If we don't see a drop in inflation and we do see a hike on the effective federal funds rate, both of which are very likely, then those bulls that have managed to keep Bitcoin above critical support at 25K may fail. And that leads us to the most important trend line in Bitcoin's chart right now. And it shows up, funnily enough, exactly at the same place on two different charts. The 200 daily exponential moving average for Bitcoin sits here at the very bottom of the transitionary zone on Bitcoin, a zone between 25,236 and 28,545, which demarcates whether or not Bitcoin is in a bull market or a bear market. We are in transition right now to bull market. Our 200 daily EMA sits at exactly $25,000 right now. Furthermore, the 200 weekly EMA also sits at exactly $25,236 right now. The 200 DEMA, the 200 WEMA, the fact that 25,236 is a hugely important level based on a local high that we set in August, about August 22nd of last year, and the fact that 25K is a big even, sitting exactly a quarter of the way to $100,000, making it a very important level of support in its own right without any of those other factors. This is a huge area of convergent support. For any of you who've learned about TA through the Cryptocurrency Technical Analysis Academy or through Club DeFi's Principles of Technical Analysis, you'll know that convergence of support and resistance is very important, and it adds to the strength. 25K right now is a level that needs to hold, or else a precipitous drop would likely occur. A drop below $25,000 would likely, best case scenario, lead us to a drop all the way down to $24,100, that coming in as a local level of resistance set on February the 2nd. But more than likely, we would drop down to at least $21,500, which would be a level set by a low here on Valentine's Day and a high set here right before the FTX collapse. Thirdly, however, breaking our moving average very likely could also send us low enough to fill the CME futures gap, which sits down between $20,400 and $21,000. While I don't think CME futures gaps have to be filled, if we get that close, it likely will be, which would mean a $5,000 drop for Bitcoin if we just drop another $500 to $1,000, and if we can't hold 24K. Bottom line, if we don't hold our bottom on the bottom line at $24,000, Bitcoin's likely going to drop all the way to 20K. So what does this mean for you? Well, in short, there are major dark clouds over cryptocurrency right now. We're in a major correction, which I think is actually healthy for the market, but nevertheless would likely continue if we do manage to fall below 24,000. If that occurs, there's two things you can do. Number one, you can short the market. Number two, you can look for investment opportunities. As I said, if Bitcoin drops below $25,000 with confidence, I'm talking about a large volume candle, and Bitcoin breaks concretely and strongly in one major red candlestick, then a short trade would likely be in order. A short trade like this very well may make sense. You could have an entry price around 24,500, an exit price around 24,750, and a take profit around 21,750. Now, before you go and just set up that trade automatically, then I would encourage you to take a second and extract the principles from what I'm showing you. I'm not showing you this so that you can just go and make this trade. I'm showing you this so that you can extract the principles and make a trade based on the data that is available at the moment that you decide to enter into a trade. One of our principles of trading that we should follow is that whatever our price target is, we should set our take profit a little bit lower than that. Another principle of trading is that if you enter and you get a little bit of profit, it's a good idea to take out some so that if you have to close at break even, you make some amount of profit. Furthermore, if you do enter this short trade, I would use a trailing stop loss to protect yourself as much as you can. It's a free insurance policy. Our fourth principle of trading to employ is that our risk to reward ratio is sitting at 11. Very high risk to reward ratio. And our fifth principle here is to use a very tight stop loss so that we don't get into a trade that isn't actually going to bring us returns. Those are some of the principles you should take into shorting this market, and I'll just give you a sixth freebie. Make sure that the market is actually going into a strong downtrend and it's not just finding its low. You really want to make sure you have that volume and some kind of major candlestick confirmation or news event to confirm that a major drop is coming. Now, if we do go through this major drop, another opportunity is for investment. If Bitcoin does drop down to $20,000, that very well may be the last time in the history of cryptocurrency that you ever see Bitcoin trading at that level. And if you do accumulate down there, I think you give yourself 5 years, you're going to be glad you did. I believe during this bull market that's coming more than likely in the next year or two, at least on Bitcoin, we will likely see at least a 200 to 300% gain where Bitcoin could rally to between $70,000 and $100,000. If you are able to get in at $20,000 and we go to $70,000, then you're going to be making a 3.5x gain. If we go to $100,000, you're going to be making a 500% gain. Getting in it where we are right now at 26K, it's already going to perform pretty well if we go to 70 to 100, but how much better will that investment perform if you get in at 20 or 21 or 22? So I'd encourage you, if you don't have your percentage of your net worth in crypto where you want it yet, maybe you've set that at 1%, 3%, 5%, whatever it is, and continue to dollar cost average. And then if you do have money on the sidelines that you're looking to invest in a lump sum, your time might be coming soon. But this video is soon coming to an end. If you did enjoy today's content, make sure to hit that like button, subscribe to the channel, hit that post notification bell so you won't miss a single episode of the climate of crypto. Whether we go through a major drop from here or we manage to hold at 25K and go into a rally, I think big opportunity is right around the corner. And for those who invest in their education and in their own spiritual growth and in their own growth in their discipline and in ordering their life and in ensuring that they are in a position to handle the blessings that we are being given, I think you are going to be very successful moving into the next several years here in cryptocurrency's history. If you enjoyed today's video, make sure to check out one of our affiliates, Lux Algo. Use coupon code JEB30, JEBB30 to get 30% off at checkout. You'll save yourself $472 over the first year if you use the annual plan and our coupon code stacked on top of each other. Also, make sure to sign up for Club DeFi's Principles of Technical Analysis, because over there, I'm going to teach you everything that I just showed you here in this video so that you can use it for all of your technical analysis and you can go out and do TA just like this all on your own. Make sure to hit that like button, subscribe to the channel, and hit that post notification bell. But before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.